Today is the 22nd of September 2010, and we would like to welcome you to megatrade101.com. This is a follow-through analysis of our most recent video presentation where we presented the US dollar index, comparing it with the euro as well as the pound and the cross rate on the euro pound, more particularly simply because it has the most potential in the market. And this video basically confirms our market outlook, anticipating the US dollar's movement lower simply because the Federal Reserve have initiated that they would do everything and flood the market with whatever is necessary as far as funds are concerned to help perk up the economy. And that is the major reason why you could see here that the US dollar index is at 79.86, and we have did mention that once it has broken this particular right here at 80.35, which is the neckline on a technical basis, and it's currently working at 79.86, this would reach a slow at around 79.25 level. However, the only consideration here is that any new penetration on a neckline or lower price would make a reaction where a slight recovery would be experienced towards the end of the day. It's only a Wednesday, so we still have 2 trading days left where we could still see a continuation of the US dollar heading lower. Looking at it more on the right shoulder here, a head formation and a slight lower or slanting left shoulder, where the actual formation of a head and shoulders formation would be bearish for the US dollar. With quite an active market, I've been getting a lot of mails and alerts. So excuse some of the interruptions as far as the sound bites are concerned, simply because it is indeed an active market that I'm actually recording this video. So currently this week still looks like more bearish, and even if we do check how the monthly chart looks like on the US dollar, let me try to get this thing spread so we would be able to look at it more. So right here is showing a reversal bar with 3 configurations where it really on a monthly basis have shown an indication that a reversal was already in the making. And the next target levels would be at around 79.21, heading with an extension possibly at 78.67 for the dollar index that we're looking at, simply because now there really is no real indication, even on a technical basis, for a recovery. However, we're reaching the end of the month, So we would have a intraday slight recovery for the US dollar simply because of its technically oversold area. So now you have a glimpse of both the weekly as well as the monthly charts for the US dollar, and we would like to compare it now with the euro as well as the pound and the euro pound cross rate for that matter. Here we have the euro dollar on a daily basis, where a significant bar here on a candlestick with a long tail up have actually thrown off some of the analysts and traders where they've been anticipating a reversal of the euro at around 1.30 even, or after making this long tail up and closed lower, have signified that there is a possible reversal for the market. Unfortunately, the intraday bar as well as this bar, although more importantly, even if you look at it on a weekly basis here, okay, this now will show you a spinning top and a strong bullish bar with higher volumes and a good size momentum of traders coming in the market, anticipation of a weakness on the dollar. On the pound itself, showed the same with a hanging man here that signified on a daily basis that it can still move lower, which it did, and that's the reason why it has been pacing the euro, and the pound has been slowly trying to catch up. However, with these two combined, which is the cross rate of the euro pound on a weekly basis, have led us on a strong buying sentiment. Bias it may seem, because obviously you could see from the previous video presentations that we have done, most of the topic and currency choice that we have made for the video and as well as our trading has been more focused on the euro pound instead of the other currencies or the major pairs. So, retrospect to this video analysis, the current price for the euro pound now is at 85.64 with a high at 76 and a low of 83.35. If you would be kind enough to check that this is on a weekly basis, although any price above 0.8310, which is the closing price here on the top, the opening price here from the previous 2 weeks, and last week's closing at above the 0.8310, which is 83.37 with the same opening price, and now after touching or penetrating the 21-week moving average above the 0.8413, has confirmed the next target level would have been 85.43, where it has now made an extension at 0.8564. Obviously, with momentum gaining higher, as well as the Williams percentage rate reaching its minus 1.94 currently, and with an RSI still at the low level of 54%, with volumes still sustaining, although prices are higher. But if you check the financial futures in the futures market, we do have a higher degree of open interest with enough volumes where for the euro to move higher, simply not because of the euro strength now, it's because of the weakness of the US dollar. So this basically represents the confirmation of our market view report last Monday, and it's only Wednesday, so we would like to say that the confirmation for the dollar to move lower is still intact, and that's the reason why our title then would have been for the dollar's weakness to continue. And if you check our blog as well as our website for complete article in support of our market view analysis, we say thank you very much and have a good trading day.